IVM.
The new age ULIPs,
Yeah.
the fifth generation products that you've got, they are such cutthroat efficient products that you'll be hard pressed to find anything that is better than that.
Yeah.
And as a package, if you look at it, then I just look at it as an investor for a common person. There's only one thing that one should see: what is the XIRR?
Yeah.
Correct?
And
What
you
is
can't
the
go wrong
XIRR?
with that.
What
that's
is the
black and
XIRR?
white,
You
yeah.
tell me. Yeah, if it is a mutual fund, if it is my picking of stocks, if it is an ETF, if it is any institution or anybody who is managing my account, a fund manager who's going to give me that, or it is a ULIP. And if the XIRR, wherever it is better, you should invest. And if a product is so efficient and effectively, you should look at the tax component also.
Always.
And then make the choice. You will realize that that's not the case. And if you combine that with a pure protection product like a term, because I always believe that part of the thing has to be there.
That's a necessity.
You can invest, you can grow your money with the but you should have a term plan also.
Yeah.
If you look at this combo, you'll realize not much difficult to understand. As I said, we have spoken about this before today also, but I think everybody has to maximize the availability of that 2.5 lakh, because see, you have to understand, in 2021, earlier to that, it was unlimited, whatever money you invest in ULIPs, because you wanted to make the market, etc. Any amount of money would have been invested and it would have been tax free. Now that has been reduced to 2.5 lakh. Now who is to say that doesn't come down further? Say it can reduce to 1.5 while it is available, because there is a grandfathering clause. If you invest now, it is for the entire policy that you will get that maturity tax free. So you should take benefit of that as long as it is available. Yeah. The other part is on the non-par space, the one that wealth preservation angle that we were speaking about. Yeah. Now here, earlier there was, and this is till the last year, it was also unlimited. Whatever money you invest, all the corpus will be tax free. But now that limit is still 5 lakh.
Yeah, that's what I was referring to.
Yes, that is 5 lakh. Because, there are these inherent benefits with these products that people are realizing, and which is why a lot of money got into this space. But still, I would say, for a country which is as under-penetrated and savings rate is high, but investing into such instruments and investing in general is quite low.
Yeah.
So trying to 5 lakh is a very high limit. Even 2.5 lakh for ULIP is a very high limit. See, for ULIPs, for the SIPs that we see are anywhere between 5 to 10,000 per month.
Per month, correct.
So that leaves a lot of headroom for the retail investors per se.
There's some benefit for term cover also, I believe.
Term is entirely, and term I would say is more from a very genuine need perspective that one should buy, and that you have to do the calculation. You have to sit. Yeah. You have to understand that what is my earnings, what is the cover, what are the liabilities that I have.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and on today's episode, I'm talking with our guest Pradeep Yadav, Director Investments, PolicyBazaar.com. We are talking about insurance, investments, and much more. Pradeep, welcome to Paisa Vaisa. I'm thrilled to have Policy Bazaar for the very first time on a podcast. So thank you so much for doing this for our listeners.
Thanks for having me here. It's a pleasure and honor to be here.
So Policy Bazaar is among like the oldest fintech startups. I was wondering that how come you've not been on our show so far, but it's good to have you here. You just run us through your journey, because I think that the listed entity is called PB Fintech, and you guys listed last year.
We list. Okay. Yeah. I'll take you through.
Let's just walk through the entire journey so far.
Yes. So Policy Bazaar was started by 3 people. As I said, Yashish Dahiya, Alok Bansal and Avnish Nirjar. This was in the year 2008. Wow. And it was started as a listing platform. And post that, we started, with the fulfillment and the complete journey. And slowly, we have seen through the regulation changes, etc., in ULIP, which made them more and more, inclusive and good products, efficient products per se, and all the other forms of insurance, general insurance, life insurance. Then we have now started as a SME insurance, corporate insurance. We have also started in Dubai. So all of these have come along the way. And we listed, now it will be probably close to 2 years. We listed in November 2021 on the bourses, and the name of the ticker is PB, Policy Bazaar. PB Fintech is the official name. Yeah. So that's the journey has been.
My mind kind of just glazes over some of these years. After the pandemic, I get my 2020s and 2021s wrong. Sorry about that. So it's been 2 years since you've listed, right?
Yes.
Wonderful journey. So before I start on, the other products, what's been happening with ULIPs? You mentioned that also in your starting bit. We had taxation earlier this year. okay, which supposedly, closed some loophole or something. So what's been happening in ULIPs, specifically after the tax amendment came in?
Again, I'll say this was February, I think 2021, if my memory serves me well. Prior to February 2021, ULIPs had no restriction on the amount that will be, the proceeds out of the policy will be tax-free. The entire amount used to be tax-free, no matter what your investment amount is. February 2021, there was a cap that was introduced that until a investment amount of 2.5 lakh rupees, the proceeds will be tax-free. Beyond that, it will come under the purview of taxation, and then you'll have to pay the long-term capital gains tax. So even now, that is the state right now. There is no other fresh amendment or fresh resolution that has come in that has challenged the 2.5 limit. So it is right now till 2.5 lakh rupees, whatever you invest, the corpus that comes out of at the maturity will be completely tax-free for you.
Okay. And how have ULIPs performed after that? Any change, or it's still business as usual?
I would say,
in the 2 years?
Initially there was a hangover, and I would say the earlier generation ULIPs that we have were not very efficient and not very cost efficient per se, because, in a cutthroat industry, and I've heard some of your podcasts, you cover a lot of mutual funds, etc. also. So there the game is, in the basis points, 20 basis point lesser cost, 30 basis point lesser cost. So people, compare according to the costs also, and which is where in the last 2-3 years, if you go back and see, a lot of ULIPs have come a long way, I would say. There are many, many efficient and, some ULIPs which are beating even in mutual funds on the cost structure. Yeah. And ULIPs by nature of their structure or the instrument that they carry anyways a lot of other benefits. So like, for example, if one were to say that a like-for-like ULIP, which is a passive ULIP, which invests like a passive mutual fund that you can have on an index-based ULIP. And now if the returns are taken out of the question, because both the indexes will give the same return and there is hardly any drop. Post that, the only factor that remains is the cost of the product. Now if the cost of the product is also the same, you can't match probably ULIP, because ULIP is going to give you a life cover first for the entire, even if you pay one premium and if something happens to you, 10x of the annual premium, you'll have the cover throughout the policy. And the other thing is that whatever is the amount that comes out of maturity of this policy will be completely tax-free. So let's take this example. So if suppose you were to invest 2.5 lakh rupees, which is the limitation. So if you just are trying to maximize the limit, 2.5 lakh, if you have invested for a period of say 20 years or so, if my math is right, and if I'm compounding at 12 to 13%, which is the Nifty 50 return, you will get to a corpus of 2.5 CR or so. And if you calculate the capital gains, 2 CR, if any other instrument you were to invest, mutual funds, stocks, directly, index, ETFs, anywhere you go, you'll have to pay at least 20 lakh as tax, long-term tax on the final amount. But here this is the only instrument where you will have to not pay any tax.
Wow. 10% of 2 crore.
10% of 2.5 crore.
Minus
50 lakhs is your investment amount. 2 crore is the gains that you have made, and 10% of that. So this is the probably only instrument left right now where you can get this kind of benefits.
And the similar number for a mutual fund for a ULIP would be 0 because there's no taxation.
There is no taxation. For mutual fund, you'll have to pay 20 lakh tax. And when you say, it's just 10% of the amount, but you have to see it's on the final compounded amount that you have to pay 10%.
Yeah, which could be
huge. It's huge.
So let's take a step back, Pradeep. I want to understand the various investment products that are there within insurance. Okay, This is a space that is, it's quite huge. If we look at the insurance industry before it opened up to private competition, you just had LIC, you had those endowment policies, you had a lot of stuff out there.
Yes.
Today here, sitting in 2023, you just walk our listeners through what are the investment products in insurance. Okay, we just mentioned ULIP. I know there are retirement plans, savings plans, endowments, etc. Just walk us through what are these products, and probably within each of them, how do they work and how they're different from one another?
Sure. And I would, just try and address the entire category per se of insurance, because, a big, and to me, it's a fairly important category is the protection category also. When you say insurance, there is a category called pure protection, which is the term products, fixed benefit product. Like if something happens, if the event happens, a complete sum assured is given to the family. And that is probably, according to me, a must and the first product that anybody should buy. After that, you come to the savings or the investment space that you are speaking about. There you have products which are, the one that we discussed just now is a ULIP category, which is unit linked kind of a product, very similar to the mutual fund structure, except that it also had the life insurance cover and the taxation benefit that it has. But nowadays, increasingly it's become very difficult to even separate out the performances between mutual funds and ULIPs, because they are also banking on this massive passive investing boom. So that's one. The ULIP products, obviously, our viewers may also be knowing, and it is well publicized and, a data which is readily available of all the indexes and how they perform. The other category, which is, a little older, would say the endowment plans. There are two major category of plans, I would say. One is the completely 100% guaranteed category, which is known as the non-participating, non-par plans, or so they are called. For, layman's language, I would say it is like 100% guaranteed products. Today, you know how much you're going to invest, and you know the date on which the corpus and what is the exact amount that you want to invest. And since the, Corona happened, after that, the wars that have been going on, you would have seen the interest rates going up. And because of that, there is a, very high and very lucrative category also, I would say, especially from a wealth preservation angle. So you have, this is one of the lines that did a massive amount of business in the entire insurance category per se in the last year. So this was the category where a lot of money went in, because, if somebody is guaranteeing you 8.5% for 20 years or so, see, mind you may have a FD, etc. option, which are taxable, but they are available till 10 years or so. You have a PPF 15 years, you have Sukanya Samriddhi 21 years, but having an option of guaranteed return of 8.5% for 25 years is amazing, right? From a wealth preservation angle, of course. So that is the non-par space. Then you have and probably the oldest stream of category that we had, which is the participating space. Now here you invest in a company, suppose, and I will take the oldest name, is probably LIC or even other companies, Tata, etc., who had these endowment plans where you are, probably buying into the company, or you're giving the money to the company. They will invest the money and you will participate in the profits that are generated out of that investment. And that is done through the bonuses, regular bonuses, revisionary bonuses, and all of that. So this is the older category. Out of these, the other categories have now started taking shape. And amongst these plans, you have variant, like you can have now a retirement plan, because increasingly a lot of Indians have started speaking or are trying to take into consideration the retirement thing, and also the annuity plans. Annuity are plain simple, right? You have some corpus and you want to have a perpetual income. And some percentage of that you keep taking it perpetually until you are alive. And there is the option of joint annuity also, like I take it for me and my spouse, and until one of us survives, we keep getting that income. And once death happens eventually of both the partners, then the money, there is an option of return of premium. Whatever was the corpus that I gave you, that will be returned to my nominee.
Okay.
So
what is the spread of the investment products that you just mentioned out here? Like if I were to look at the pie, and here I'm talking of the entire, I would say, private insurance industry, not LIC, because that I think is a very different picture. What's the breakup out here? What is the most popular plan? Like you just mentioned about how the non-participating plans became really popular in the last 1 year. A lot of money has gone there. I know, are these the savings plan that that we talk about? Are they different?
Yes. Sure. And I would say, if I'm talking of the larger manufacturers, because they have the different distribution systems, and for each of these distribution systems, obviously the split is quite different. And if I were to talk about, and it is different for the different years also.
Maybe if I put this on your side, like when you are selling something on your platform, what are the trends that you've seen? Which investment products have become really popular?
So very clearly, the trend that we see is last year we saw a lot of uptake in non-par. And increasingly every year on year, we are seeing a lot of traction on the ULIP space.
Nice.
And this is in line with what we are seeing in the investment category also. Capital market also, a lot of money is flowing through SIP route. That's the same that we are seeing in ULIPs, because we also sell in the monthly mode. So a lot of customers are getting into this habit of, trying to get to a month, investing something every month and then building a corpus, and that is compounding along with the benefits of tax and cover that they anyways get.
Yeah, very interesting. So non-participating and ULIPs. ULIPs, I think
ULIPs are probably the highest, because
ULIPs,
after it there was a surge in the non-par. Post that, I think ULIPs have now taken.
And if I were just to make our listeners understand how does the non-participating work, just a basic structure, could you just help us with that?
Yeah, there are two major categories or variants of this. One is, either you can go for a lump sum payout kind of option. Suppose I want to, have I want to have a lump sum at the end of, say, 20th year, and I will invest for probably 10 years or 15 years. I will invest for a certain premium that I'm comfortable with, say 1 lakh or so. So I will invest for 15 years or so. Then at the end of 20th year, at the rate that at which I locked in my rate. Because if I were to buy in today, I will have a rate of that non-par. So suppose that rate is 8% or so. Now that will be fixed compounding for the entire 20 years. So all the money, whenever it comes in, it starts compounding at 8%, and the corpus that is there, I will receive at the end of 20th year. This is one form of it.
Sure.
The other form are as a method of income. So suppose I pay for 12 years or so, and it is a very favorite, combination that sells, that I pay for 12 years, I wait for a couple of years, then I start getting income for 24 years or so.
Correct.
So another combination that is very, favorable, or a lot of people opt for it.
And two things here. One is that my insurance cover is throughout my lifetime.
Insurance cover, so in insurance, whenever you go back and see, you will see that, and even in ULIPs, and it's a good question that you asked, we say that whatever is the value versus whatever is the corpus value, whatever is higher we will give. Because, in the initial phases of the policy, and specifically for ULIPs I'm saying, because people shouldn't just, whenever in the initial stages, you will realize that it will take 4 or 5 years for a person who is paying 1 lakh rupees for the corpus to reach 10 lakh rupees, you'll appreciate. But from day one or the first month itself, once you pay, the cover of 10 lakh starts. And that is an appreciable feature that most of our people don't have.
And for this to be, for an investor in these products to truly unlock the value, he needs to be invested throughout the lifetime.
Yes.
Right? I mean, because this is not a liquid product.
Yes. Yeah, I would say, there is a restriction, we are speaking of the product which is sold in majority, which is the ULIP product. So there is a restriction of locking in, keeping the funds there for 5 years.
5 years, yeah.
5 years is the limit. Yeah. And I would say, the famous saying that goes that it's the time in the market rather than actually trying to time the market. So that's the thing, because if you stay invested, and these are, actively managed funds, also very beautiful, from very big fund houses we have, also passive funds, they will start showing their effect once you stay there. Obviously. Otherwise, if you have, if you're planning for other type of investments, there is equity, there is mutual fund, but wealth will ideally be made if you stay longer.
I'll tell you where I'm coming from. It's that whole, the bogey that I was missold this product. So what happens is that they come in with this expectation, and then, without probably reading the form before signing it, or at least this used to be the case back in the day when ULIPs used to be missold, and then suddenly you assume that this ULIP is something that I can liquidate whenever I want. And when you go to liquidate it, you realize, oh, I put in 10 lakhs, but I'm getting only 7.5 lakhs. How is that even possible? How can I lose my capital? Till, they had to be reminded that that's essentially how the product works. And, I don't know how the situation is right now. That's the only reason why I raised this.
No, fair point. And, it's a fair question, and we should address some difficult questions also.
Yeah.
So ULIPs, like I said, prior to 2012 and 2013 or so, were quite highly charged and opaque products, I would say. And which is where all this, noise comes from. And once you have established a reputation which says, because obviously in a product, if there is a very high cost structure, it leaves with very less amount that is to be invested. And once that amount goes, and even if it compounds at 15-20%, if majority of the amount has been lost in the cost and charges, then the investor would not see the benefits, right? And he will start inherently believing that, the product is bad. And what happens after that is, once he sees his fund amount, he'll see a very, mismatch in what his expectation was.
Exactly.
But here I would really want to appreciate the regulator, because of the regulations that were brought in 2012 and 13. It made it absolutely clear that the maximum FMC that you can charge is 1.35%. That's it. The other charges are, everything is, under the regulations, and they have to get the approval of the product. And post that, it becomes quite transparent, like extremely transparent. Now you can open a BI of a ULIP product and understand that whatever my money is going in, even in charges, and some of the products have yield as low as 1.1%, 1.05%, which is fantastic. And with the kind of returns that these fund houses are showing, and other benefits that I told you about, the maturity and the term cover, it is like probably the default choice that everybody should try and maximize. Because we have the ability to maximize for 2.5 lakhs for everyone.
Correct.
After that, you can invest wherever, as per your preference.
I mean, what you're referring to obviously is the ATC benefit that you get.
ATC is while investing, and 1010D is the maturity benefit of whatever comes out, even that is tax-free.
Yeah, so you're saying that 2.5 lakhs is every year. Each and every year, if I invest 2.5 lakhs in an insurance product, the ones that you mentioned.
So you can buy once.
Yeah.
That premium you will have to pay for 10 years or so.
Correct.
And that premium you can always, claim as
So
the
that
ATC
goes,
benefit, and the proceeds out of that policy will be completely tax-free.
so that goes out straight to my income. So if my income is 100, it becomes 100 minus 2.5, and I
ATC
pay
is
tax
the
on.
maximum,
and of
subject
course
to the limits.
The biggest one, like you said, is once the lifetime of the product is over, the sum assured that I get out of it is totally completely tax free.
Yeah, the corpus, whatever is the
corpus,
maturity
the
amount,
corpus,
because sum assured, after 5 years of compounding, sum assured becomes irrelevant because the corpus value is such, because 5 years
Sorry,
compounding.
in my head that retirement corpus is still there.
No.
I would have meant retirement corpus like what you're saying, but I said sum assured. Okay. Now that we've explained the product, the tax benefits, I want to just go back to that very, very, very nice, I would say almost delicious 8 to 8.5% interest rate that you mentioned, being guaranteed. Can we just drill that down? I know that interest rates are pretty much on a, I wouldn't say, so at a near term high. A lot of people, I've had debt fund managers coming on the show saying that if you're not at the peak right now, we're almost there. Maybe one more rate hike from here. So why would you not lock in such rates if you're getting it at 20, for 20 years, reasonably guaranteed, I would say. Drill this 8.5% down, because sometimes I really wonder about the calculations that I get, and I do get a lot of these plans from a lot of people talking about these rates. But once I get into them, some have starting of the year IRR, they start at the starting date rather than the ending date, and if you tweak these around, your real number is probably closer to 7%. So could you just just explain how this works? Because 8.5, guaranteed tax free sounds like, wow, I want to sign up for this already. Just walk our listeners
in case,
through
and
this.
I will walk you through this. And in case you're wondering, see, you will realize your product is absolutely hit if you know that most of the CAs are buying that product.
Okay, I was CA.
This is a little giveaway, because for the first time in my life also, and I have been working with Policy Bazaar since 2012. This is my campus job that I got, and I never got out.
Nice.
And since 2012, this is the first time that we had a lot of CAs, a lot of HNIs really lapped the product up when they knew. And something is working or something is efficient when people of that category who are generally, sleeping through all the products that are launched, but they eventually wake up and they realize, this is once in a lifetime opportunity. And I'm saying we are talking about 8%. This number was still higher. It was 8.6 or something, which is the highest that I have seen. And this is with one HDFC product that was launched. And, these, so here, and I'm assuming this is how they are structured at the back end, is because at that point in time, the Bharat bond as well as the GSEC rates were at all time high. And most of the companies who are underwriting these products have bought that paper in bulk. So there is an amount of business that can be written, and I'm just giving a little bit of technical, so that some of the money that is being written is backed by this paper that has already been bought and kept by the insurance companies, and hence they are able to guarantee such rates for the 20 years or so, because these bonds also, and even so, this is something which I read yesterday, that today in India, so the bonds we have just had a launch of, I think, 50-year or 45-year bonds. That is insane, and that the rate of that paper is 7.1 or 7.2%.
Is that right?
And this is yes, this is as recent as yesterday's news. So, and it saw a lot of traction. Now, you can understand.
These papers aren't very liquid in any case.
But institutions, see, I'm assuming, and see, what is the theme right now? A lot of money is flowing through SIPs into these institutions.
Correct.
Right? And when we talk about ULIPs also, at the back end, it is a fund house. It is a institution who's going to then deploy this money. Right? And these institutions can buy this paper or merge their portfolios or book and have this paper, and then they guarantee that there's no rocket science. They will not be able to guarantee if they don't have the they'll have to get it approved, and the portion of how many people are there and what is going to be their persistency and how much money is going to flow in and how much is backed by what is very clear. There is no hidden agenda here. It's just that, and you will appreciate that this rate also has been dropping as
it has.
So the historically high rate you will not get it today.
Obviously.
So you are 40-50 basis points lower than that. The corona rate you will not get even today.
Obviously. And I'm sure that there's, I think you would also agree that these products are now transparent enough for the listeners to themselves figure how they work. So they don't have to take your word for it that it's 8.5, 8, whatever the number is.
No, so as per regulation.
As per regulation, exactly.
As per regulation.
An Excel file has to be
And a BI, we call it benefit illustration, has to be explained to the customer, and he has
to sign off also on that. That I've seen this.
Yeah, and in online world, we sell on calls which are 100% recorded, all recorded, and we also show it on a screen sharing, and we explain, these are the costs, this is the date, and in BI it is explained in a proper cash flow. This is the date on which this is the money that you're gonna get. So that money is there written in that document, and you sign, and you get it on your address also, and you get it in your email.
And it's not so complex. I mean, if you can understand Excel, you can just put in an IRR function and figure it out.
Trust me. And then they calculate. Net yield is mandated to be given on that. So you'll realize that, whatever is the cost, hardly anything, it comes out to be extremely lucrative. And then if you add on top of that the taxation angle, then you can't beat it.
Then you can't beat it.
Then you
obviously.
can't beat it. Yeah.
And like I was saying, the investor has to sign off on this. He can figure this out for himself. And under the hood, so to say, these products are nothing but the institution just holding on to these bonds and doing nothing else. Because if you have a 40-year GSEC at 7.1%, literally all you have to do is just wait.
You can have a spread of 30-40 basis points for your operations. Then you can give out a 6.6, 6.7. And I'm saying very conservative.
And this is sovereign. Right? So there's no, there's obviously going to be no credit risk on that. I'm just trying to, figure the skepticism around these products. I'm just trying to take all of them out of the picture for people to,
I'll help you understand. If you now take yourself, and this is as much as my memory serves me, and from the times that our parents used to invest, guaranteed FD rate of SBI Bank, and not smaller banks, 10 years back.
As good as sovereign again.
10-11%,
correct,
right? And our parents would have invested for these, you have to appreciate, for 12 years, 10 years, whatever was the maximum limit back then. At that point in time, these products, you will think of, this rate is insane. Insane, Pradeep. This is not possible, right? And now today we are thinking of that for 7.5 to 8%, right? and I'm sure 5 years, 10 years hence we'll be thinking of that as 5%, 6%. We'll be thinking, this is insane.
So I'm just going to wind up this first part of our recording with one thought, which is, I think, fundamentally it's there in a lot of people's heads that you should not mix insurance and investment, and here we are, the two of us actually talking about doing exactly that. There is merit in that argument, of course, and people believe in that, which is their point of view. We've spoken about how, there is another point of view that people can listen, and it's their call in their life, it's their money. What are your own thoughts on this? Having worked at Policy Bazaar for such a long time, this whole thing about do not mix insurance and investment, what are your thoughts on this?
And again, it's a good question, and it's a common question, I would say, and a question which needs to be addressed. We have tried to address it in as many forums as we can. And again, I'll take back to the discussion that we've had. Prior to 2012-13, these were opaque products, which is why the skepticism, and which is why, people are saying, you want to have this feature, then at least have a separate protection product, and, you want to do this. But as I said, the new age ULIPs, the 5th generation products that you've got, they are such cutthroat efficient products that you'll be hard pressed to find anything that is, better than that. And as a package, if you look at it, then I just look at it as an investor for a common person. There's only one thing that one should see. What is the XIRR?
Yeah.
Correct?
And
what
you
is
can't
the
go
XIRR?
wrong with that.
What is the XIRR?
Black and white,
you tell me, if it is a mutual fund, if it is my picking of stocks, if it is an ETF, if it is any institution or anybody who is managing my account, a fund manager who's going to give me that, or it is a ULIP. And if the XIRR, wherever it is better, you should invest. And if a product is so efficient and effectively, you should look at the tax component also.
Always.
And then make the choice. You will realize that that's not the case. And if you combine that with a pure protection product like a term, because, I always believe that part of the thing has to be there.
That's a necessity.
You can invest, you can grow your money with the... But you should have a term plan also. If you look at this combo, you'll realize, not much difficult to understand. Go by XIRR, you will realize you will not be disappointed. And for pure protection, you should have the term. This is my view of looking at it.
I'm sure that people who like mutual funds will also agree with you on that at least a term plan, the pure risk coverage is non-negotiable. People, all of us need that. After that, how you play around with your investments is a different story. Okay, Pradeep, let's go into this. Okay, we ended the previous part on insurance and investment and how you should have the basic term plan in place and then play around with investment. Let's just drill down this further. In your view, how does one strike this balance between insurance and investment?
Like I said, if I, and this I'm saying from a age perspective of people when they start earning, say 25 to 30, that kind of a age bracket. If we start, I think the first and foremost thing one has to do is buy a term plan.
Sure.
Because, there is no other product or supplement that one can have. And suppose, example, I'm earning, say 10 lakh rupees a year. Okay. And with that kind of a income that I have a certain lifestyle. And if I were to think of, if I am not there, how do I ensure that my family maintains this lifestyle and they don't have to, look out for challenges and all of these stuff, then pure protection is the only product. So I'm saying, term plan is a non-negotiable thing that you have to.
Yeah.
The other part is now on the investment space. Like I said, you have to be absolutely, money minded there and look at what is the effective net tax effective XIRR. And the discussion that we have had, if you consider everything, you will realize that, and I would say, there also you should try and divide it as whatever is your long-term view and what is it that you want to do in the short term. If you want an extremely liquid option, then mutual funds are not bad. Yeah. I'm saying mutual funds, you can go for it. And you need slightly even shorter. Like you want to have within a year or 6 months or so, you can invest in liquid funds, you can invest in equities if you have the know-how.
Correct.
The only problem is, and this is where it starts getting interesting, is because most of the people don't make money in the equity market. So it's very difficult to recommend because it requires a lot of, psychological edge also to keep invested, to keep staying invested and make money through our markets. Yeah. So that's the main reason. And obviously, I always believe that, if there is a guiding force, like in ULIP, there is a cap. There is a restriction that, for all of these things to be tax-free, you have to stay invested for 5 years.
Exactly.
That sort of builds in a discipline also. That there's nothing that's going to come out. The better keep paying your money. And once post 5-6 years, if you go and see your fund value, you will be amazed by the corpus that you would have made.
Yeah, that's the one thing that I really want to emphasize to our listeners out here. You just go back, maybe just hit the rewind button and hear what Pradeep said about the liquidity part. It's very important for people to understand that. I think that's one area where I'm not sure whether mutual funds and investment products within insurance are even comparable. Mutual funds have that inbuilt liquidity for a reason, and ULIPs or whatever other investment products are there in insurance have a lock-in for a reason. I think if people understand the difference between that, that might work in their benefit. And that's why please.
Mostly insurance is goal-based. If you really look at it, it is goal-based. Yeah. I want to make my wealth. I want to, have a child plan or a category which defines this. And this is a very beautiful category that is coming up. And then you have something for your retirement or pension.
Everything is there.
Yeah. So this is with a goal in mind. And you don't want to tinker with your goal, every 6 months, now the banks are going up. I may shift from here to there and, mind well, but it has the flexibility to give you free switches also. Yeah. Free switches in a ULIP plan. But I would advise, once you decide a theme, just stick to it. Stick to it for some time. Let it function.
Now let's jump into tax.
Okay.
In a couple of months, you'll have, every tax department will be chasing down their employees to declare their list of investments, etc., etc. People who have done nothing for the last 10 months will suddenly jump into, "Arey yaar, kuch batao ki which is the best, scheme to invest in." Help us through that. Just let's say that we are somewhere in the, I don't know what, first week of Feb ये सब चालू होता है?
December I think increasingly over a lot of corporates start.
I haven't worked in the job for a long time. I remember that when I was working, it used to be Feb. ये December में चालू हो जाता है.
आजकल, yes. December, I think towards the end you'll start getting emails. Multiple corporates. Some of the more systematic ones will start from December. Some of the other ones, the startups will start in Feb also. But yeah.
Good for them. Let's just please give us a structure or some tips or some advice on how to maximize.
As I said, we have spoken about this before today also, but I think everybody has to maximize the availability of that 2.5 lakh because see, you have to understand in 2021, earlier to that, it was unlimited. Whatever money you invest in ULIPs because you wanted to make the market, etc. Any amount of money would have been invested and it would have been tax-free. Now that has been reduced to 2.5 lakh. Now who is to say that doesn't come down further? Say it can reduce to 1.5 while it is available because there is a grandfathering clause. If you invest now, it is for the entire policy that you will get that maturity tax free. So you should take benefit of that as long as it is available. Yeah. The other part is on the non-par space. The one that wealth preservation angle that we were speaking about. Yeah. Now here, earlier there was, and this is still the last year, it was also unlimited. Whatever money you invest, all the corpus will be tax free. But now that limit is still 5 lakh.
Yeah, that's what I was referring
Yes,
to. Yeah.
that is 5 lakh, because there are these inherent benefits with these products that people are realizing, and which is why a lot of money got into this space. But still, I would say, for a country which is as under penetrated and savings rate is high, but investing into such instruments and investing in general is quite low.
Yeah.
So trying to 5 lakh is a very high limit. Even 2.5 lakh for ULIP is a very high limit. See, for ULIPs, for the SIPs that we see are anywhere between 5 to 10,000 per month.
Per month, correct.
So that leaves a lot of headroom for the retail investors per se.
Yeah.
So they should, I think, 2.5 lakh there, 5 lakh here, and of course the ATC etc. Nowadays everybody maximizes.
So give me
that.
the specific products that our listeners should, like, after they listen to you right now, this is what they should look out for when they're planning their tax. What are the specific products they should look out for?
ULIP products by all the major fund houses that are
That's
there.
one,
So
yeah.
HDFC, there are very good products. Click to Wealth, Bajaj Goal Assure is a very good product.
Sure.
You have from ICICI also. So all these fund
Pick and
houses,
choose from them.
yeah, and you will realize that it's very transparent. You can go back and compare on a website also.
Okay.
Like what are the charges, what are the expected rates, how are the funds performing,
Yeah.
and much similar to mutual fund.
So ULIPs are written on the sticker. Okay. Non-par, we are talking about non-participating, but sticker
I
pe
think
kya
you're
bolta hai wo,
interested.
yeah? What does it say on the sticker out
Guaranteed plans.
Guaranteed
It says
plans.
guaranteed plans.
Yeah.
So 100% guaranteed plans if you search, and
Yeah.
most of the insurance websites also you'll see it is in the guaranteed section.
So
guaranteed is ye तय है बिल्कुल. This is 100% guaranteed that you're gonna get on this date.
ठीक है. So ULIPs हो गया, guaranteed हो गया. There's some benefit for term cover also, I believe. Yeah?
Term is entirely, and term I would say is more from a very genuine need perspective that one should buy, and that you have to do the calculation. You have to sit.
Yeah.
You have to understand that what is my earnings, what is the cover, what are the liabilities that I have. ऐसा ना हो कि मतलब you have a 1 crore house and you are earning 5-7
Actually,
lakh
you know
rupees.
what? I was going to ask this to you later, but let's get into it right now. Now, how should one approach choosing this term plan, this pure risk product? What should they be thinking, and how should they choose a good product? Help us in that.
So on term, it's very clear. See, and it is a function of what is your earning, what is your lifestyle like, and what is the minimum expenses that you need for in case you are not there, your family should be able to continue with that lifestyle. So as a benchmark thumb rule, I would say anywhere between 15 times to 20 times of your annual income. So suppose मैं 10 lakh कमाता हूँ, तो 1.5 CR or so, to 2 CR, anywhere between that is a good benchmark to start with. Plus in term plans, now you have the option of, it is quite customizable. A lot of people don't know about this, but there are very good riders that you could attach. There is a CI rider where, in case you were to
personal
happen to have any, any one of the critical illnesses, the benefit will be accelerated, or there will be an additional payout other than the term cover. There will be additional to take care of the immediate financial needs that generate out of these situations. There is a disability cover, total permanent disability होने पे premiums कौन pay करे. All of these things make it a very beautiful. You can customize as per you, whatever you need. Disability, accidental death, CI riders, all of these riders, you can choose a combination, but basic cover you should try and at least take, I think, 15x of whatever is your income.
How important is this claims ratio thing? I mean, a lot of people just get hung up with that 99%, 98%, 99 point whatever percent. They see something with 95%, they just don't even look at it. So, in my checklist of things to look out for, where does that figure?
I think it's an important metric because it just builds the trust for the brand. In the minds of the consumer, he's wanting to look at, what happens when people generally claim. And when you see a ratio like 99% or so, and when and especially, I'm speaking from PolicyBazaar's perspective, because we speak on a recorded line, we call up the customer, understand, explain him all of that. Now, having disclosed everything, having filled the form, you have to understand and appreciate in online, the disclosure is far, far higher as compared to the other channels. Because it's quite transparent and customers filling the form. We are speaking on a recorded line. We are in this diabetes hai, what is your weight, what is your height, what are the illnesses, what are the problems that you have had. There's a complete declaration. Post that, I would say the chances of claim are almost nil, because you've declared whatever it is. You will undergo a medical test, and once a policy is issued, you need not worry a bit. But yes, that ratio, that when you see it, just re-establishes your belief that
Okay, we've done with taxation, we've done with term plans. Last couple of questions is two very popular products, two very popular goals, I would say, since we were talking about goals some time back, is retirement and child. Let's talk about retirement first. It's becoming a very big goal for people. So How would you, what's your view on managing your finances, our finances towards the retirement goal using the products that we're talking about?
So retirement, the way I see it is, and obviously the age old cliche of the earlier you start, the better it is, and that is absolutely true, because in compounding terms, you can start small, but if you start very early, it becomes that much easier.
Yeah.
But I would say there you have to actually know what is the corpus that I need to have. Say suppose I am a 30-year-old and I'm planning to retire at say 50 or so. So there is a 20-year period wherein I will invest, and post 30 I need to have a corpus X.
Correct.
Now that what is that X? A lot of people don't know that. And the way to calculate that is, and this is how I think about it, is probably whatever is your expenses or lifestyle maintenance that you need right now. Say suppose I have a monthly expenses of 1 lakh, 1.5 lakhs or
12
so.
lakhs a year.
Yeah, and that you have to probably inflate by the inflation rate of 5%, 4%, because in a long term period it will revert to the 4% kind of a number or 5% kind of a number. You'll realize that 1 lakh today will be probably 2.5 lakh by the time I am 50-year-old. Okay, so now 2.5 lakh is the monthly income that I need. And there at that point in time, what is the corpus that I would need, because I need to have this perpetual income every month of 2.5 lakh. And there also, if you have to have a benchmark, I think 4 to 5% is, if you keep withdrawing every time, I think that is the corpus. So probably, having this kind of a number is 7 to 8 crore. To have a lifestyle of 2.5 is the kind of number that.
And then you work back on the amount.
And then you work back, and you can actually there are annuity products etc. also, wherein you can park that lump sum, the one that we mentioned earlier, joint life annuity with return of premium option. So I and my spouse get into that and give that 8 crore corpus to the annuity. It keeps giving us monthly income. We enjoy, and if one of the spouses is not there, the other keeps getting it, and if both of them conk off, then the nominee gets the purchase price back.
Annuities are still not, I would say, as easily understood by a lot of people.
It's a beautiful product.
Yeah,
it's a beautiful product. And it also helps with legacy planning. If you really think about it, that 8 crore is somebody's going to get it.
Yeah. So
that is the legacy that we leave.
Yeah. I think that, it's a few years away from people to understand how convenient it is and how you will appreciate that convenience when you're 50. Because right now people are still thinking in terms of, I can just put in a mutual fund and then you just do an SWP, etc., and then works as the same way. So I don't want to get into that discussion because that's a much bigger discussion. Instead, I want to move to the next one, which is child plans. Okay, because both of us know that this children's plan has also come under its own, I would say, attraction or opinions by a lot of people about how you can easily set up, using a mix of equity and debt mutual funds and doing this as SWP that I'm talking about. So can you build a case for these child retirement plans? Why they are actually so useful and how they work?
I would say child ULIP or insurance plans in the child category are probably the best instrument that one can have, and they are probably better than any other instrument, and I'll tell you why. Because some of the way they are structured. Okay, so what is any time whenever we want to plan for our kids, education or future, what do? We think of, we may invest 5,000, 10,000 rupees per month. Let's let it build to a corpus. Correct. When he's of college going age or he wants to go abroad, etc. That is when I'll start withdrawing. Or I'll withdraw a chunk of it. And this is the general thinking. Any point in time, and I'm sure the majority of parents in our country would never think that what happens if after paying 2 premiums, I conk off, I'm not there. Nobody gives this particular thing a thought. So first thing is, I paid 2 premiums in the mutual fund, etc. Or I've bought this child plan in a ULIP section. First thing is, what happens immediately right now when the parent is not there. There is a financial liability, etc. That you need to immediately clear, or, emotional turmoil is there. Nobody can fill that void. But, if we talk about a little objective things, then there is a financial burden that immediately comes onto the family. So there, if you are having a child plan, immediately you will get the sum assured, which is the 10 times of the annual premium. So if I paid even 2 premiums of 10,000 rupees, so annually it is 1.2 lakh, so I will get 12 lakh. Family immediately gets 12 lakh rupees. Second is, the company will keep paying the premium on your behalf for the goal that you had envisioned for your child.
So actually,
this is the second part. So the
very
policy
important,
very important, right? Because your goal should continue. You are there, you are not there. Your goal should continue, right? This is the second part.
And you don't want your survivor to go through the torture of figuring out how this works.
Yes, and third part, and this is in some of the products that we have, beautiful products. the child will also get an annual premium equal to the annual premium that you were supposed to pay. तो 1,20,000 उसको policy term तक मिलते रहेगा every year to take care of his expenses. And finally, the last thing is, after 20 years or 25 years, whatever I had envisioned for that, he will get that money at the end of it. Charo feature, when you look at it and you look at it in combination and you think of it, there is no other instrument in the country which can provide this. I'm telling you, and we don't think about it in this ways. And even if it leads to 50 basis point lesser in return, these features are worth their weight in gold. This is the child plan for you.
And how do they work? Just if you
this is just a simple child plan that you can go ahead and buy. These are all inbuilt features of that child plan.
As in,
there are covers of.
So you start. I mean, you give a fixed commitment every year.
This is just like for the consumer, it will not be any different than buying a plain ULIP other plan.
Okay.
For the consumer, it is just a child plan.
Just got these added features
because it will ask for the age of the kid. It will ask all the details. Okay, so you're buying now a child plan. So what is the age of the kid? What is this? Your age? What is this? And then premiums, etc.
Yeah, and just to wrap all this up is that everything that you've told us so far, whether it's has to do with an annuity or a ULIP or a retirement plan or a child's plan or a non-par. All of this is there on Policy Bazaar.
Yes.
Our listeners, if they're interested, they just have to go to your website or probably engage with one of your, representatives to walk through all of this. If I've assumed it right, because I understand it. The thing is that with insurance, it's a little bit more, for the lack of a better word, complicated as compared to just putting into an SIP, which is an equity fund or a debt mutual fund. With insurance, I at least believe that whoever's putting any money on the investment side should understand in black and white how this product works.
Yes.
And at least I'm assuming Policy Bazaar has a walkthrough of all of this.
Yes. And if you go and visit the website, you will see there is an attempt to compare, there is an effort or there is a lot of work that has been done on the platform that enables people to compare. So suppose term plan ki baat karte. So if you want to compare term plans, you can compare 2-3 companies ek saath and see what is there in what is not covered in this. And, and then there is a call center assistance also. Yeah. So they can ask, in case you have a question, what happens if this kind of a death happens? Is this covered? Is this not covered? Yeah. How do I, and what if I don't pay premium for 15 days or so I get late? All of these questions, and I'm sure these questions come to people, and from a savings perspective, of course, all these things, and then the BI explanation, and what amount of money for how many years, and what if I increase my tenure by 5 years, what is the corpus that may come,
correct,
and what are the conditions, and all of these things are there, and the assistance is also there.
Yeah, and no spam, na? I hope, because spam ka to bahut.
No, see, the thing is, in a country like ours, a lot of people need assistance, and a lot of people actually get it, on their own also, and or they believe that they can. So when we try and understand, who of them, and majority, and you have to appreciate, majority of India is uninsured, and they are just opening up to these products. So it becomes extremely important to explain them properly and then sell.
I'm sure you yourself must be getting a lot of calls asking you for loan and credit cards and all that, so you know how painful it is. But that's actually a valid point. Some of these calls might actually be useful for someone who does not have a product and probably needs to know about it.
And these are 20-year contracts. See, when we buy
that's something people don't get.
Yeah.
These are 20-year contracts.
You have to understand and spend time understanding, comparing things. You can't just go and buy one product.
Yeah. And by institutions that have to fulfill a certain requirement with the IRD. I mean, these are not fly by night or whatever it is. There are people who, stake their reputations. And we've had so many of them on the show. We've had Vishal Sapawal from HDFC Life. We've had a lot of people from the insurance industry. And I always, try my level best at least to engage with the insurance part, because that is a part that, even here to today we spoke about the investment side. The life insurance side, to main thak gaya hu almost. I just try, just to make an effort ki bhai, please go out and insure yourself. It's just such a basic thing. Whatever age you are, it just requires a medical test. If people can go out and do that, and if they do it, folks, really,
I think post-corona things have changed. Post-corona things have really changed. People have started the eagerness or the need to be aware about what is covered, what is not covered, what happens in this scenario has increased quite a bit. It took an event like that for
imagine
people to. But yes.
I mean, we are done with our normal recording. I have my final standard question that we give to all our guests, which is any content that you're seeing or book that you're reading that you could recommend to our listeners.
Book I have, the recent book that I've been reading and not finished is Capital Cycles, which this is an interesting thing because it was a recommendation by a friend, and it tries to explain how in a particular industry, capital and people start getting interested. They try and inflate the numbers, and then suddenly when it comes to a peak and efficient category, and that is when people start moving, and how the stock market operates.
थोड़ा heavy duty लग रहा है.
A bit of technical from the capital markets perspective, but it's a good book, decent read. But suggestion wise, if you ask me, probably I would suggest one of the older books which are good for motivation. I think you could read Shoe Dog. Probably that's a very good book.
The Nike one.
Yeah. Very good book. I would say very motivational. You can read on what all things he just kept going on and on and on. How to start and did that journey to come to that point and never give up.
There's of course Air on Amazon Prime for people
yes,
who want
there
to
is
figure
Air.
out the
Yeah,
Jordan
there is
Air.
Air. I just saw Air also. It's fantastic. Huh?
It's just such
fantastic.
a funny movie, and it's still such a motivational movie in its own way. So yeah, that's folks. I mean, that's a wrap on this episode of Paisa Vaisa. My guest Pradeep Yadav, Director Investments PolicyBazaar.com. Pradeep, first time on Paisa Vaisa. Hope that you return. Thank you so much for doing this for our listeners.
No, thank you very much. It's my pleasure to be here.
IVM